Good morning, everybody. Welcome to the State of the Market, the turbo income version. And I am your host, Hans Albrecht. I'm the director of income trading at Option Pit. Why income? Well, why not income, right? Everyone loves a little bit more income. I've managed $1 billion in option strategies, including many income strategies. So around 700 million in overlay strategies, grabbing that, harvesting that option premium when it makes sense, right? That's what the difference was for me when I came into the industry, having been a market maker, an options market maker, which is a bit more quantitative oriented, right? You're doing volatility arbitrage, you're doing kind of fun stuff that requires really understanding what you're doing on the options side. So when I became a fund manager, managing all these different ETFs, these income ETFs, I brought that sensibility to it. And I said, well, what are you guys doing? You're not doing this right. It's all about edge. So as you get familiar with me over time, and I hope you join us every Friday because we always have some great stuff to talk about, you'll notice that it's all about edge, right? It's all about the edge. Why? Because it's about stability. It's about avoiding stepping in the piles of you-know-what as much as possible. So everybody's been in this. I'm not immune to this. I've been through my phases as I've honed my skills over the decades. And making a little money here and there is pretty good. And it's not actually, it's hard, but the harder part is holding on to most of it, right? And so what does that mean? That means that probably, and I don't know, you guys can toss in your view on that, but I'll bet you, here, let me see if I can get this chat going here. Can you guys hear me? Shane, Jose, Andrew's there. We got Flo in Northport, Florida, man. The Florida man is with us. Liquid. Vicky, of course. Always great to see Vicky. So okay, good. You guys can hear me, Gus. So half the battle is avoiding the difficult situations as much as you can, right? Pressing the buy button or the sell button is the easy part. It's kind of preparing. And so that's what we do in Turbo Income. So we can get to some of that in a moment. Great. Good to hear, Andrew. Thank you for that. So let's talk about the markets. Let's take a look here. I hope my screen is relatively clear to you guys. I wish I could make this just a touch bigger. Oh, that's just a little bit bigger. There we go. That's a little bit better. So let's take a look. Good morning, up Chuck. So we have a situation here in markets where I've been pretty bullish. So anybody in Turbo Income and watching me I'm pretty bullish, right? But the problem is we have this headline risk. And so we have a battle going on. I'm going to show you my little battle slide here. We've got the big, beautiful bill and potentially tariffs hitting a little bit of a wall. So we had a couple of courts block the tariffs and then they've sort of put a stay on that. So there's, I think it's back on for now. Trump's tariffs to remain in effect after appeals court grants a stay of executing the tariffs, right? Torching the tariffs. So I think we're kind of in an interesting situation again where we have, a lot of spending. I'm not sure how much Doge has really done. We've got a lot of spending going on, a lot of spending suggested. There doesn't seem to be a real kind of effort at fiscal responsibility in a sense. And we kind of almost need the tariffs. Tariffs has almost taken on this weird sort of texture, because if we're not going to cut spending, if we're going to spend more, then maybe we kind of need some tariffs. So tariffs are a bit on this sort of, they're much more negative than positive, especially above a certain level. So there's no question nobody wants a ton of tariffs because that could become the growth scare, right? That's a global growth scare kind of issue. And markets absolutely don't want that. Markets can handle a bit of inflation. Markets can handle some higher rates. Rates are high, from our perspective, we were used to zero rates for a decade, but they're really not that high. So markets can handle that. The economy can handle a 4.5% yield on the 10-year. But what's interesting today is we see that yields are absorbing this. And I thought that was kind of interesting that we saw TLT come down and yields maybe just pop a little bit, but they come back down again now that maybe tariffs are potentially back on. So things are getting kind of weird, right? So maybe, okay, now we need that money. And so maybe TLT is kind of saying, oh, it's breathing a little bit of a sigh of relief. So we really have this sort of strange kind of situation. Here's your TLT. This is your long bond, your 20 to 30-year bond ETF. So when it goes down, rates are going up. And when the TLT goes up, rates are going down. So generally speaking, this is one thing to watch. So I want you guys to really sort of have that TLT. I want you to have rates on your radar because they're the things that are going to maybe give us a little indication of something going on underneath the hood a little bit more. Slide show. Okay, yeah, I could try that. Let's see how that goes. I'm not able to jump around, but okay. So the point is we're kind of in this world where I think equities are kind of shrugging things off a little bit. I'm going to show you why in a moment. There's some good reasons. So we kind of have this sort of, this cage match between equities kind of wanting to go up. I think AI is a big piece of that. I think people aren't in this market. I think that's a big piece of that. And you've got, yields maybe kind of thinking about things in a different way. So you kind of have a little bit of the bond world and you have a little bit of the stock world. Now, if the bond world gets a little bit ugly, that's why we want to watch TLT. If the bond world gets a little bit ugly, then that eventually spills over into the equity world. And I know Mark talks about that quite a bit. So we're going to talk a little bit about the good, the bad, and the maybe today. This is my little catchy version of the good, the bad, and the ugly. So let's look at what happened again this morning. So this is interesting. The market's kind of shrugging this off a little bit here. An hour ago, Donald Trump, so this is maybe a couple of hours ago, around 8 o'clock, saying, I made a fast deal with China. I wanted to save them. I wanted to save their economy. He wanted to, come in and be a hero and stabilize things quickly. For sure. I think he wanted to stabilize things everywhere in the US and everywhere. And everybody was happy. That's the good news. The bad news is that China, perhaps not surprisingly to some, has totally violated its agreement with the US. So much for being Mr. Nice Guy. So I think what this has introduced, I think there's some good vibes for NVIDIA. I think there's just a general kind of bid to the market, as I'm going to show you in a moment. But we're kind of running up against, maybe in the background a little bit is, stocks are a little bit expensive. If 2025 is going to be maybe a bit choppy and not that great, I think there's a chance that that's wrong. I think we could see an improvement in earnings. But having said that, maybe stocks are kind of, pricing in some good news at this point. And then we've got this ongoing tariff thing. We kind of thought it had been sort of put aside for a moment, but as we know, yeah, see, that's why I can't really control it. As we know, President Trump is not happy with the taco moniker. Oh, I see what you can do, Cool Hand. Oh boy, I'm gonna have to practice that. Yeah, it's FOMO. I'm gonna show you that in a moment, Jose. It's a lot of FOMO. I think this is one of the most sort of hated rallies that we've seen in a very, very long time. And I've been doing this a long time. It's a very low participation rally, and that is because people are negative, but that's also a positive from a contrarian standpoint, right? If people need to get back in, that's a lot of fuel, a lot of ammo. So he doesn't like being called taco. If you saw the conference yesterday, he was like not pleased with that. So number one, he may want to, as he's doing this morning, kind of assert himself as the alpha guy in this conversation again. Does not like being called that. And taco means Trump. What is taco again? Trump always caves in or something like that. Chickens out. Sorry, Trump always chickens out. Not very nice. Not very nice. So we have that. We have this tariff thing that is ongoing. And then I think we have kind of AI and generally a healthy economy kind of battling that. So what that means is we're kind of in this stage of probably where VIX is just sort of going to sit between 18 and 23, 24 for a little while as we try to sort things out. So let's take a look at the VIX futures curve. So what's the VIX futures curve? I'm not going to spend much time on this. This is a happy picture, right? This is VIX. This is not what we saw in April. We saw VIX futures downward sloping, lots of nervousness. Front part of the curve, which is where people are panicking and protecting themselves, was higher than every other part, every other subsequent month. This is a happy picture, right? So equities right now, and VIX, which absorbs worry from all kinds of areas as well, but equities are basically still kind of happy about things. Now, let's talk about this issue here. We have positioning, and I'm going to give you some water cooler education in a moment. But look at the Goldman Sachs equity sentiment indicator. Still pretty negative, right? Under zero, really not improving with that rally in stocks. We've seen this 1,000-point rally in stocks, and we're not seeing any sign of things getting overheated from a flow standpoint, right? We see retail getting in, but institutional is kind of going, eh. So retail has been correct, right? Remember when retail used to be the dumb money? Well, retail has been correct. It is very powerful these days. And the institutions have been selling. I'll show you the hedge funds in a moment, but sure, they've come back a little bit. They've allocated a little bit. But look at this. Look at hedge funds. They've barely reallocated. I mean, they've been kind of selling for a while. They've been selling MAG. They've been selling NVIDIA. We'll get to that. They've been selling. They do not believe this market is going to go higher. And I can tell you, hedge funds have this ability to go, all right, we're wrong. And if that starts at some point, it's going to be a potential steady flow back into the market, potentially, right? And so we have these emotionless strategies that are, we have CTA, these, commodity trading advisory type funds. Like basically it just means like things that are sort of algorithmically driven, that just kind of get into the market, get out of the market. They're sort of a little bit emotionless, which is why I kind of call them the Terminator strategies. They don't care. They have no emotion. They just do whatever the heck they're programmed to do. And so I'm going to give you this part of the show. I'm trying to come up with some cool show segments here. This part of the show is called Sound Smart at the Water Cooler, or confuse the heck out of people, probably. Let's take a look at where vol targeting is sitting. So vol targeting strategies are really, really not in the market right now, right? So what do they do? What do vol targeting strategies do? They buy when volatility is low. They sell when volatility is high. What happened in April? Volatility went through the roof. Levels of volatility we haven't seen since the GFC. So they sell. They got out. Vol targeting, those funds were literally out of the market by the time we got to the low 5,000s. What's happened lately? Well, lately, they've kind of started to reallocate a little bit, but they've got a long way to go. They're really not sitting in this market. They're kind of out of the market still. They've allocated a little bit, but they need volatility, those longer term measures, to come down again. So the point that I'm making here is that there's a lot of potential fuel to the upside, and that may be part of this. As I've been saying for weeks and weeks, I've been saying this: the pain point is up. Where's the pain point? The pain point is a lot of people didn't get back in, and you kind of can't blame them. All the strategists were all over the place. Goldman was up here. They dropped it. Yardeni was up here. He dropped it twice. Now he's going back up again. I mean, everybody's confused, and they're not, a lot of people aren't traders. A lot of entities out there aren't just flipping things around, day trading. They get out, and now they're trying to figure out, well, do we need to get back in? So we have this sort of push, I believe, back into AI. I think things are very, very interesting. Look at M2 money supply. Look at this. Head fake is wrong. M2 money supply, which is, one of the things that you like to look at as in terms of liquidity. There's a lot of liquidity out there, right? That's not coming down. Money supply it's a little bit lagging, but it's still pointing up. That's why Bitcoin's kind of hanging in there, in my view, as well as Bitcoin being kind of a bit beta to NASDAQ. I think it's a bit risk on, risk off. Like, it's not so much underground anymore, right? Like, a lot of people know about Bitcoin and a lot of institutions get into it. So it's a bit more risk on, risk off, as opposed to sort of this underground secret society thing that everyone sort of thinks is going to do its own thing. If you overlay it with NASDAQ, levered NASDAQ over the last few years, it pretty much tracks it almost perfectly. So what am I seeing? Well, we've got NVIDIA, right? We've got this report that came out, and I've been bullish on it. I haven't looked at it this morning. I think it was kind of relatively unchanged. But I think we're potentially, getting going on this next leg of AI, which kind of goes from training, spending loads of CapEx on training to also inference. I think the training thing keeps going, right? Look at what's happening in the Middle East, which took pressure off NVIDIA. The Middle East, the Saudis are buying, the UAE's buying. They are saying, okay, we're all in on this. That's what I think. I think they're saying we're all in on data centers. We're all in on AI, and that means a lot of sales for companies like NVIDIA. And NVIDIA is kind of the top dog. It does inference training. Training is like you put in like 10 million pictures of a cat. Inference is you show it a picture of a cat and it goes, yeah, that's a cat, based on the training. So, but inference is interesting to me because that's where things start to translate into real world, right? You could train all you want. What you're starting to see now is an exponential move upwards in the usefulness of AI. And I think that's where it starts to kind of, they have deep pockets. It's perfect for them. It's fantastic news for the semiconductor industry and for AI in general. They're smart. They see what's going on. They've got oil. They want to diversify away from oil to as much as they can, and they're going to go all in on this. And so this is potentially really great news, along with the fact that I think there's monetization to come from AI now. Everyone's like, oh, AI, it's like a fancy chatbot. It's not. It's way, way more than that. And somebody came out the other day, I think it was Eric Schmidt, the old Google CEO, and he said AI is underrated. And I think that's 100% true. And that's hard to believe because it's all we've been talking about for 2 years. AI is underrated. I think so. And then some people say, well, specific to NVIDIA, well, I think it's very hard to switch. And some people are like, well, you can switch to AMD, you can port the software, all that stuff. No, this is their secret weapon, CUDA, right? Everyone thinks, yeah, that's interesting, eh? They flood the market. They're going to play nice a little bit, get all their chips. One thing I kind of like about NVIDIA, it's kind of interesting. You can see that, look at last year where, profit margins were pumping and it was the hottest stock on earth, almost ever, one of the hottest stocks ever. And you saw the option volumes just soar. Look at that, 45% of all single stock options were NVIDIA, between 35 and 45% for, kind of a good stretch there. Now we've seen this sort of denouement, not as much interest. And I like to see that. I like to see that people are not as interested. I think part of that is, okay, there's been a broadening out and there's other things to trade and invest in. So for sure, that's definitely a part of it. I'm not saying, this is totally weird, but I like to see that there has been a skepticism to CapEx in AI, a skepticism to this trend continuing. So I think that's kind of cool to think about. So I think that's kind of the market that we have right now. I think, look, we're shrugging off. It's probably going to be hard for you guys to see this, but we're shrugging off some of this today. Oh, here's Ulta. That looks fantastic. Ulta Beauty suffered for years. You can see we're kind of coming back into this uptrend here. So on the S&P, we had this beautiful, beautiful breakout above this line here. And that's around here is where I really started to get constructive. And I said, this pain point is up. There's nobody's in this market. And sure enough, I still think they're not quite in this market. Retail is in, but there's big money that potentially isn't in. I think that creates amazing opportunities that we're looking at in Turbo Income. I think there are just phenomenal opportunities. And the upside options are not expensive. Yeah, look at Tesla. What a turnaround. I mean, it was hated, right? Everyone was turning on Elon and Tesla cars and all this. Now he's focusing back on what he's really good at, Mr. Innovator. And I think they're one of the great moonshot companies out there. We just made money in Turbo Income on a Tesla turbo trade. Did really nicely on that. I'm probably going to have to put on another one. Probably going to have no choice but to put on another one. But in my personal account, I also own just stock, and it's kind of stock that can go. It could go to 100, but it could go to 1,000. Market cap be damned. I don't care about these arguments about market cap. Nvidia's three trillion. It can go to 6 trillion. Now they do have competition. There's competition, and I think we move into different areas. So for me, some of the things that I've been looking at have been kind of like looking at something like the SOX, right? SOXels, yeah, why not Tesla? Why not? That's your moonshot stock. I remember hearing once in the private equity world, somebody said, when you're investing in private companies, it's the idea is important, but the idea with the great people behind them is way more important. People make things happen. He's not in the Doge house. I like that, Shane. People make things happen. He's got the money. He's got the influence. People are going to listen to him. Even if they don't like him personally, they are going to listen to him and they're going to want to make money with him. And he's got the vision. He's the Howard Hughes. He's that guy. So I think for me, it's interesting. It's very risky and volatile, but I think that's kind of my moonshot play. One of my moonshot plays. So the SOX is interesting because it's a bit more spread out, right? It's 30 semiconductor names. It's going to, because I think this next stage is going to have like companies that focus a little bit on individual little like smaller chips, like a Qualcomm. I don't know, like companies that sort of bring AI to the edge. What does edge mean? It means AI where you are right now, not on your computer. It's sensors. It's like a Tesla has many sensors. It's nothing new, but I think it proliferates throughout the economy, this ability to have AI in your pocket. So I'm not super negative on Apple because I think that's the ultimate AI edge in your pocket play. Now we don't know, are they going to have to, they're not going to build iPhones for $3,000 in New Jersey. So they're going to sort it out. But at some point, I think that's an interesting play again. It's not cheap, but I think you kind of have to sort of look to the horizon on some of these things, particularly because there's going to be disruption out there. That's one of the things we've got to have eyes in the back of our heads looking for, like, what is a CRM, is a Salesforce going to have trouble when AI can kind of do a lot of what they do? So you kind of have to sort of really look. It's an ultimate age of disruption, but I think it's also a new age of incredible opportunity. And we're going to be bringing you something. I'm going to be bringing you something soon. So you guys can get excited about that. But perhaps over the next few weeks, we're working on something that's going to capitalize on that. So I think things are looking interesting. I mean, we're bouncing back almost 590 on the SPY. For me, things are stable. Like, I think we do have the headline tape bomb potential, right? I think Trump might be angry. He doesn't like the taco thing. He doesn't like the courts blocking him, blocking the most powerful man in the world. How dare they? So there's always going to be the potential for something to happen. So I think you want, and a VIX 20 is kind of reflecting that, but you got to be aware. Yeah, I only want to stick my neck out a little in those great income trades. So when I go and I look for these trades, okay, so we're all winners so far. We do have a couple positions underwater right now, which are I think are still good positions. But so far we've had all winners in Turbo Income. And why do you want to be a part of Turbo Income? because 80% of active managers, this just popped into my email this morning, 80% of active managers in public markets underperform the index. You want to make money, you want to take control of your financial future. You want to drive that bus. An advisor is going to toe the line like you've never seen. I've known a lot of these guys, billion-dollar asset managers. They are not sticking their necks out. They are underperforming every single year because they basically closet own the index. They just own the index in a different way. And then they call you up and they go, well, I've got, I think J&J or Pfizer looks really good. And that's their secret sauce, right? No, they don't. They're not doing anything of value in terms of getting you to where you want to be. And I know some people have $300,000, $500,000, $800,000 portfolios. Yeah, you're going to do well withdrawing 4% from that every year. No, you need to take control of your financial future, and turbo income is one way we do that. We look at the market temperature indicator. It gives us ideas. It's a point system, and it includes my risk dampener, which gets you out at certain times. Like, for example, well, I was warning of a crash December 13th when we were trading at all-time highs, but that's beside the point. What we had at, here we go. We see the MTI super green, gets you red, gets you out at 597. We dropped to under 500. Did I know that was going to happen? No. But tools of the trade are going to be important to you. And so the turbo trade is an interesting part. So you may have noticed in the performance that there are some trades. So these are a little bit, these are going to cost you, maybe 800, 900, some of them a little bit higher per trade. But look at these wins, 25, 37, 41, 54. These are going to be your more traditional income trades. Capital required, very little. You can do this with a small account, 408, 475, 339, 242, 835, and some really, really nice wins in there. So there's a little bit for everyone. We go through a rigorous process that I've developed over a long, long time. Because remember, smarter, not harder. And once I show you how to do this, I can do it for you, which I do every week. The best trade of the week, constantly bringing you trades. You're probably going to tell me, I don't need any more trades, Hans. I've got enough. Shut up. But you're also going to learn how to do this. So we screen, quality, stability, technicals, volatility edge, and we narrow it down to that one great stock every week, which is giving us the characteristics of what we want. Is it always going to be the highest premium? No, because that's not the name of this game. You can trade, you can be an income trader to make money, or you can be an income trader to have fun and have excitement. I see people doing income on all these crazy products, MSTX and all these things, ASTR, ASTS, I don't know, space, stocks, all this stuff. Dangerous stuff. Fun, dangerous. Make money or get excitement. Go to Vegas for excitement. I'm guessing that you're in this to make money and do better for yourself. So scan. So we got to go, guys. I think we are, so again, we are always open for a chat. You can talk to Ted at Option Pit. You can grab our, Christian, if you could put the link in there. I think you may have put it up earlier, but there's a link that you can use to come and check out what we're all about at Turbo Income. It's been fantastic. There's different ways to get in, different ways to get involved. You know what? Why don't I put this in here right now, just in case Christian is off getting a coffee. And you can check it out right there. We have a very amazing and growing community. I'm in the chat all the time. I'm giving you guys all kinds of incredible value and other things. We have cash machine trades. We've got a Bitcoin income approach in there. So fantastic stuff. So everybody have a wonderful day. I like what I'm seeing there. We've got an Amazon income trade that's baking off right now. And when I say baking off, we're letting time do its thing and give us the cold hard cash, I hope. And I'm looking at another name. I'm looking at one in Microsoft. If I see a little bit more stability today, I may bite on that one. But what happens is into the weekend, I was a market maker for a long time. What I would do is I'd go on Friday, Yes, the Oilers can win the cup. They are going to win the cup. It's going to be tough, but Florida's too good. But Connor, if Connor plays well, if McDavid plays well, man, that would be exciting for him. So if what was I talking about? Andrew, you're welcome, Andrew. I think we're going to look at a couple of trades today. Oh yeah, going into the weekend, what I used to do is I would go to my quoter, which was more primitive, 15 years ago, and I would go, it was on Friday, and I'd go, oh, I want Monday prices. There's Monday prices. So everybody who thinks they can sell options on Friday afternoon and get all that juicy free money as they sleep and play golf on the weekend, generally not the case. Now, sometimes, right, we'll see, because we do have this weekend, we kind of have headline risk. And so I'm not saying that's always the case, but the weekend effect is very, very real. So we may wait for Monday to look at that trade. And I've got one other trade that I'm really, really excited about that's come through the filter process that you get if you're in Turbo Income. So I better go. I think there's some other classes coming up and everyone wants to get on with their day. Thank you for coming. I really appreciate it. Don't miss it every Friday. I'm going to give you the rundown and give you my thoughts on everything. So take care, everybody. Thanks, Cool Hand Vic, Jose, everyone, Vicky, take care. WA. We'll see you guys in some of the other rooms. We've got some amazing traders in here, and we'll see you in some of the other rooms.